Hey everybody, hopefully you're having a good day. My name's Andy. My channel's Fighting Value. If you like making money, subscribe to the channel, give me a thumbs up, leave comments below if you guys have any questions on anything. I'd be more than willing to answer anything that you guys have, even if it's this presentation related or something else, just put it in the comment section. I call this presentation Diamond Hands. A Diamond Hands is being able to hold on to your investments through thick and thin. I'm going to go through a couple of things to get a perspective on where we're at. So, and maybe some expectations on what prices could do. So here we go into the Diamond Hands presentation. I'm going to talk about markets. So this is some market updates here. Show you that major trends have been broken. And when I talk about major trends that are being broken, it's the dollar, which is down, which means we have inflation. Yields are going up. We've got ratios for gold to copper, gold to platinum, commodities as stocks. They're all breaking to the side that commodities are favorable. We've got real estate in an uptrend with increasing prices and housing starts going up into an expansionary phase. And I think that major banks need time to position, whether it be banks or financial people, whoever it may be. And they want to take your shares. So their tactic is typically to do a strong sell-off to take your shares. And they can position cheaper if they are successful with that tactic. So they're trying to scare you out of shares and take your shares. And my opinion is don't be scared, be focused. We have massive premiums on buying physical metals. The physical metals are being drawn down over time, the inventory. COVID has disrupted supply chains of commodities behind the inventories. And I think that higher prices are coming eventually. And we can see those market deficits out in the future as well. So are you going to be scared out of your shares? Are you going to give it to them? That's the question that you have to answer. Are you going to be scared out and just say, here's my shares, take them? Not me. So check out my other videos. I've got supply deficits for a lot of the metals out there, the mining costs to mine the metals and energy. I show you all that in some of the videos. We've got increasing demand for materials, market conditions and valuations. I talk about that extensively to show you how cheap and undervalued these commodities are and materials. I go into market conditions of real estate and how real estate spurs the rotation of money. And I think you just need to educate yourself and be prepared for what's coming. And I'm going to show you a slide, just a graph to hopefully better prepare you for what's coming. And I think that diamond hands are needed for this bull market. You got to hold on. And if you understand I'll call it the rewards from this, you would not be selling if you knew the upside potential in these sectors. And this is what I think is coming. This is the valuation on the left-hand side and time on the bottom. So time here, valuation here. The smart money, they buy in this stealth phase. And I think the stealth phase was from 2016 to 2019. Nobody was talking about commodities. It wasn't very well known. And the prices were bottoming out. And they were very volatile between this 2016, 2019, and the beginning of 2020. And I think 2020 is when the awareness phase, you start seeing institutions coming in. You start seeing a lot more YouTube videos. You started seeing institutional investors and big money starting to come in. You can see it in uranium, in oil. You can see all of these sectors are putting in bottoms and starting to come off the bottoms with the 50 days crossing the 200 days. What I want you to focus on here, and we're past this stealth phase where it's real volatile and moving all over the place. We kind of pulled up and there's this bear trap. We have to endure this first sell-off where there's a bear trap. And that trap right here scares a lot of people out of their investments. They get scared out of it. And I don't want you to be scared out of it because look what comes up after the bear trap. It's absolute euphoria. This is where we need to ride this entire thing. And I think we're somewhere either here or here. I'm not sure. We're somewhere in this institutional investors phase. I don't know how long an institutional investors phase typically lasts. Typically, it's a year or two, maybe a little bit more. But it's coming. We're going to see a sell-off, and we have to endure this first sell-off. It's a bear trap. So burn this image into your head. Remember the first sell-off bear trap, because it's going to come, and I don't want you to get scared out of your positions. And I need you to have the right mindset. Position sizing is critical. It's okay if you need to reallocate, if you positioned wrongly before, or if you want to position differently than what you've already done after researching more of the companies that you hold. I typically do about a 1 to 5% per position of the total portfolio value. And that's my original position. If the position grows a whole bunch, sometimes I don't sell them. And it may grow to 10 or 15% of my portfolio if it is a complete winner. Again, focus on value, the ratios, and how undervalued these companies are. Focus on value to society that material or energy brings. Look at trends in society and position as an investor. These are long-term trends. They're not short-term trading. If you're focusing on the short-term price movements and it's scaring you, you got to refocus yourself. You got to look at the big picture. You're too far into the weeds. You got to get out of the weeds, stop looking at the day-to-day movements, and look at the big picture trends, because that's where you're going to make the big money. You can't make big money looking at 10% movements and being scared out of a 10% volatility or 20%, even 30, 40% volatility. I'm stepping back. I'm looking at the big picture trends. I'm looking at how societies are moving and shifting over time. And I also want to touch on something here. I call this the coalition portfolio. Go back in my other videos or search YouTube for the coalition portfolio. I did a video on my portfolio and a lot of companies breaking decade-long chart patterns to the upside. And these decade-long patterns, I'm going to go over them. ADM, MOS, VALE, there's so many of those. I have them all listed right there. All of those. What are the chances of this happening and it being a false breakout? I mean, all of those. They're all breaking over decade-long chart patterns. All of those companies and all of those materials. What are the chances that all of those are doing false breakouts? I think it's very low. So this should give you more confidence. It's like, look, we've got the dollar breaking a decade-long pattern to the downside. We've got everything that we look at that we want to be invested in is breaking to the upside. And we should see that in the commodity to stock ratio. And look what we got here. We have a breakout. We broke this big downtrend. Now remember all of my previous videos that you guys have, you're subscribers to this channel. A lot of you are. And what do we do on the first move up? I always say this, and I've said it over many, many videos and market updates, and hopefully this is getting into your head a little bit. We usually do a breakout. So we broke out of the downtrend, and then what do we always do after? We back test or come back. So we got to hold on here. We got to hold on, and if we get a good, decent pullback, use that as a very good buying opportunity. That's the way I'm viewing things. All of these decade-long patterns are breaking. The big moves are all shifting. And we're seeing the beginning of rotation of money. And I've said in other videos that we could potentially see everything come back and get pulled back in the original technology sell-off. And I don't know how long that's going to last. And I don't know if we're in that first sell-off yet anyway, because they're going to be trying to manipulate and hold things up. And they may be successful for a good long period of time. And if they are successful, these things may be linked a little bit longer than what they normally would. But look at that picture. Look at the CRB to S&P 500 ratio here. That is a clear break. There's no ifs, ands, or buts. It's a clear break. We got to have the confidence to hold on here, and we got to cost average in when these prices bottom out. And I'll help you. Subscribe to the channel. I'll help you with charting these things out. I haven't seen a bottom yet in any of these sectors, so I'm just hanging tight. I'm holding on to my money and waiting. Now, I'm doing this because I want to change your life. That's why I created this channel. I think in order to do that, in order for you to change your life, you are going to have to do the research today in order to change your life for tomorrow. And what I suggest is to be part of this channel and our community and ride up this bull market together. And I need everyone on this channel to support each other through this bull market. Some of you guys are brand new investors. Some of you have been in the markets for many years. And you know what it's like to be a new investor. Let's help each other ride this thing higher. And you know what? It's going to take time. It's not going to be an overnight thing. It's going to take time, and you're going to have to understand the valuations. You're going to have to understand what you need to be investing in and what you need to be, I will say, what sectors to start piling into and continue to cost average in to have the ideal portfolio. Look at some of my other videos of what sectors I prefer, of what sectors I'm overweighted in. You can follow that. You don't have to. Maybe you guys are more versed in copper or nickel or some other, maybe it's lithium. Those are all great plays. I just know a little bit more about energy, and I think that's a little bit more where the leverage is, so that's where I put a little bit more of my money. I overweight those sectors just a little bit. I also overweight silver because I'm a big silver bull. The number two commodity. Number two is silver, number one is oil, so I overweight those commodities that are the most useful to society and have been the most useful in history. So if you guys like this I'll call it this channel, this content, subscribe to the channel, give me a thumb up if you like this content, leave comments below if you guys need help with anything. I can help you. I'll create videos to help you guys with your investments. Thank you for listening. This is Finding Value.